Hey everyone, welcome back to the Hedge Nova channel, where we break down the real forces that drive markets, wealth, and long-term decision making. Today, we're going to talk about something that affects every investor, even the professionals, and even the billionaires. It's emotions. And more importantly, how your emotions secretly control your investments. Most people think their decisions are logical, data-driven, and rational, but the truth is, emotions call the shots far more than we realize. So, let's get into it. So most investors underestimate just how much their internal state affects the external outcomes of their portfolio. You've probably had moments where everything on paper looked perfect. The data made sense, the trend was clear, yet something inside you hesitated. Well, that hesitation isn't random. It's emotional conditioning that's built over years of past wins, losses, fears, and expectations. And the market doesn't care about any of it. This is why two investors can look at the exact same chart and make completely different decisions. They're not seeing the chart. They're using their emotions reflected on it. And until you recognize that your behavior, not your knowledge, determines your results, then the market will always feel unpredictable. People think investing is about numbers, charts, and spreadsheets. It's not. It's about behavior. Behavior drives decisions. Decisions drives results, and your emotions sit quietly behind every decision you make. Sometimes they're whispering, sometimes they're screaming. There are three emotional forces that silently run your portfolio, whether you realize it or not. And understanding them is the difference between investing well and investing emotionally. Fear doesn't just make you run. It makes you imagine outcomes that haven't even happened yet. It creates a version of the future that feels certain even when it isn't. And once your brain believes that danger is coming, it will do anything to avoid pain, even if that means locking in losses that you would have eventually recovered from. And fear also shows up in subtle ways, like hesitating to buy when prices are low, holding too much cash for too long, or doubting your strategy the moment the volatility appears. These are invisible forms of fear, the ones that investors don't recognize until years later when they realize that the biggest cost wasn't the market, it was their hesitation. When the markets drop, fear tells you, sell now before it gets worse. Get out, protect yourself. This time it's different, but fear rarely protects your wealth. Most of the time, it absolutely destroys it. Fear pushes investors to exit positions at the worst possible moment, selling low, panicking during volatility, and believing crash headlines as if they're prophecies. Fear is loud, it's emotional, and it's urgent. And when fear takes over, logic leaves the room. If fear makes you run, then greed makes you chase. So greed convinces you that opportunity is slipping away and that you must act now. It creates urgency when none exists. It tells you discipline is for people who don't really want to win. But the more you feed greed, the harder it becomes to step back and see clearly. One of the most dangerous forms of greed is when it hides behind confidence. You tell yourself that you're being ambitious, strategic, bold, when really you're stretching too far because the idea of missing out hurts more than the thought of losing money. Greed whispers, buy more, you'll miss out. This is going to the moon, everyone's getting rich, and you should too. Well, greed is why bubbles form. Greed is why investors jump into assets they don't fully understand. And greed is why people hold positions way past the point of logic. Oh, and the worst part is that greed feels good. It feels exciting and it feels like success, but excitement is not strategy. Oh, and then we have ego. And ego shows up when things are going well. After a few good calls, a few strong months, a couple of lucky trades, well, you start to think that you figured it all out. But suddenly, you're not just investing, you're predicting. And any predictions fueled by ego are where good portfolios go to die. Because ego blinds you. It makes you believe that you're the exception, that risk doesn't apply to you, that you'll know when to exit, and that you're smarter than the market. Ego whispers, I know what I'm doing, I'll know when to get out, I can time the market, others panic but I don't. But the market doesn't reward confidence, it rewards discipline. Ego prevents you from learning, it prevents you from adapting, and it makes you double down instead of stepping back. And that's when portfolios break. Your brain treats financial losses like physical pain. And that's not a metaphor. Like neurologically, it's the exact same response. So when your investments drop, your instincts don't push you towards rational analysis. Your instincts push you towards emotional protection. And this is why intelligent investors make impulsive decisions. Their biological wiring is fighting against long-term thinking. Because your brain evolved to keep you alive, not to make you wealthy. It reacts to danger, uncertainty, reward, and loss exactly the same way it would if your real survival were at stake. Your brain cannot naturally distinguish between a market dip and a real-life threat. So when you see a red candle, your primary instincts awaken. You're not irrational. You're just human. Gold's power isn't just financial, it's psychological. Gold proves stability in a world full of noise, and it gives investors breathing room. It reduces emotional volatility. So when part of your portfolio is grounded in something steady, you become steady. Stocks trigger excitement and fear, crypto triggers hype and panic, But gold triggers something different: stability. Gold doesn't explode, it doesn't collapse, it doesn't swing 40% in a week, and that's why long-term investors rely on it. Gold isn't emotional, people are. So, the secret isn't willpower, it's structure. Systems beat emotions every single time, and automation eliminates emotional decisions. Rules create boundaries, and gold provides psychological stability. Zooming out reduces panic, and the fewer emotional decisions that you make, the more wealth you will build on purpose. So at Hedge Nova, we don't just study markets, we study people. We study how investors think and how they react and how they behave under pressure. Because the strongest strategy in the world means nothing if emotion breaks it. And that's why our entire framework is built around structure, discipline, and clarity, so that emotions never get the final say in your financial future. So before we head into the outro, let's widen the lens a little more, because emotional investing isn't just a personal issue, it's a structural one. Markets move in waves not because fundamentals change overnight, but because human behavior swings in predictable patterns. Fear clusters, greed accelerates, uncertainty spreads, and once you start recognizing that, then something powerful happens. You stop taking every market move personally. So when gold dips, you don't panic, you investigate. And when it rallies, you don't chase, you analyze. You start acting like a strategist, not a spectator. And this is why Hedge Nova keeps emphasizing emotional self-awareness. Every investor claims that they're logical until the market punches them in the face. But discipline isn't tested during calm markets, it's tested during volatility. When your instincts scream at you to react fast, even though the smartest move is often to pause. So the investors who succeed aren't the ones who know the most, they're the ones who can filter their emotions the best. And the moment you realize that, you don't just invest differently, you think differently. I promise you, that shift is where true growth begins. And that's it for today's episode, but before we wrap up, I want to leave you with something a little deeper. Because if you've made it this far, then you're clearly not someone who's just watching videos, you're building a mindset. Hedge Nova isn't here to entertain you. We're here to sharpen you, to help you detach from the noise, and to help you see the market for what it actually is. A system that rewards clarity, patience, and courage. And when you understand how emotions shape your decisions, you start seeing every trade differently. You stop reacting, you start positioning, and you start moving with intention. So if this episode gave you even one moment of clarity, one moment where you went, yeah, I do need to work on that, then imagine where you'll be after your 10th video, your 20th, your 50th, because mastery isn't built in a single insight. It's built in the repetition of better thinking. That's what we do here. So make sure you subscribe if you haven't already, not out of habit, but because you're choosing to surround yourself with information that elevates your strategy instead of sabotaging it. Share this with someone you know who trades with their heart a bit too often. We all know at least one person. And remember, successful investing isn't about predicting the next move, it's about controlling your next move. Emotional discipline isn't a skill that you're born with, it's one that you build slowly, deliberately, and consistently. Thanks for watching. Stay focused, stay rational, and stay with Hedge Nova, where we turn emotional investors into strategic ones. I'll see you in the next video.